Hello everyone. Happy Diwali to everyone. So yeah, I made few minor changes to the SPX and other indicators. So I want to quickly give an overview, like how we can use these indicators for daily income generation. So initially, I'll explain the concept, and then I'll show you with examples, and you can back test it. Right, we have nearly 90% success with all these indicators. So first of all, we need to understand few concepts. If someone is completely new to SPX or other indices or credit spreads, I'll give a quick overview and then I'll explain on how to use these indicators on a day-to-day basis. So even though I call it is for 0DT SPX, we can use the same strategy for NDX, RUT, DJX, other indices. And again, as I mentioned, right, always there can be black swan events, sudden tweets from Trump, such type of things. So it's always maintain a small position size. Don't try to go all in. Always go slow, so that even though there is some sudden bad news or something, we can recover it in next 2 or 3 days. So yeah, ensure that this is for educational purpose. Take time to learn, understand, practice. Once you gain confidence, you can start investing. So mainly there are four types of indices. Right, indices means a combination of, right, the value is derived from combination of multiple stocks. So one of the most liquid ticker or one of the most major ticker is SPX, which is a combination of 500 stocks from different domains, not just technology, from all different domains. So that's why this is considered as this is the number one ticker across the globe with the highest liquidity, highest volume each and every day. And the major advantage is it is completely cash settled, right? For example, if you buy Tesla, you buy Netflix or something, suddenly value goes up, goes down. They can assign the stocks well before the expiration date. Even before the expiration date, there is a risk of the brokerage assigning the stocks to you. Whereas with these indices, right, all these four indices, it is completely cash settled. That means at the only at the time of expiration, they will see whether you have to pay them or they have to pay you. Based on that, they will give you the money. You don't need to worry about any early assignment or suddenly they assigning the stocks with the major change. So there are mainly four indices. For the first one is SPX, second one is NDX. It is based on 100 tech stocks, right? Technology companies, which is very volatile and yeah, which can make good income if we on right direction, or it can also give big losses if we are on a wrong direction. Then we have DJX, which is the Dow Jones Industrial Average Index, based on 30 mid cap companies. This is also completely cash settled. Then the fourth one is RUT, Russell 2000 Index, based on 2000 small scale companies. Right, these are like low cap companies. So these are the four indices we can use day to day basis for generating daily income. So if you are someone who don't want to take risk initially, they also have, right, these indices also have something called as a micro. That means instead of SPX, you can trade XSP. That means it is only 1/10 value. Your risk and reward is only 1 by 10. In the same way, instead of using NDX, you can use something called XND, which is like 1/10 value. Or it is actually 1 by 100th value of NDX. And also instead of RUT, you can use the strategy on MRUT, again, which is like 1/10 of RUT. That means your risk and reward will be only 1 by 10. So initially, if you want to test out whether the strategy is working or not, right, either you can do it on paper account or you can do with a small position size or small, right, with the, so again, these XSP, XND or MRUT, these are also completely cash settled. That means there is no risk of any assignment of stocks or anything. At the end of the day, only at the end of the day, based on your trade, they will either assign, it is completely, right, they will give you the cash or they will take the cash from your account. For DJX, there is, we don't have a micro for DJX index, but for SPX, NDX, and RUT, you have a micros. If right, the strategy also you can use for the ETFs like SPY, QQQ, IWM, DIA, right? Instead of using on SPX, you can do it on SPY, right? Again, these are like one tenth, right? With SPX, either you can make huge money, or if you're on a wrong trade, wrong direction, we can also lose. If you want to take small risk, XSP is one option, which is completely cash settled, or you can use the same strategy on SPY. It's in the same way you can do on NDX or XND, or you can do it on QQQ. For Russell, you can do it on RUT or MRUT, or you can do it on IWM. For you can do DJX, or you can do it on DIA. Only risk with this SPY, QQQ, IWM, DIA is they are physically settled. That means there is a possibility they may assign the stocks to you. If you take some bull puts, or you do something, by end of the day, if you are not closing, right, for example, you get busy with your office meetings or something, you miss closing the trades, then there is a possibility broker, your right, your thinkorswim broker or Robinhood or whatever brokerage you are using, they can assign the stocks to your account. So your account, if it is a small account, or you have right, either you have to wait until you sell those stocks, your account will be completely blocked, or your margins might be used when they assign these stocks. So that is the only risk, but your risk is only one tenth here compared to SPX, NDX, or RUT or DJX. You can also use the same strategy, which I'm going to explain with SPY, QQQ, IWM, or DIA. Right? I hope it is clear. So you can use the strategy. Once you gain confidence, you can use it on all these four where you can make nice profits every day. Or in the initial days, if you want to gain the confidence, you can use them on XSP, XND, MRUT, which are completely low risk and completely cash settled. Or the other low risk is you can do it on SPY, QQQ, IWM, DIA, which are also low risk, but only risk is if you miss closing the trades before 3 p.m. or 3:15 p.m. Central on the day, there is a possibility they can assign the stocks to you. That is the only risk. So the major advantage with SPX, XSP, as I mentioned, are right, are all these indices. Generally, they have huge volumes, huge liquidity every day, and you already know what is right, what is your risk, what is the reward. Right. For example, yesterday we did 66, 30, 35 bull puts. We collected $240. That means your maximum risk is 260. Your reward is 240. When you enter the trade itself, you know what how much you make or how much you lose if it goes in the other direction. Right? If it is a 5 point spread, if you that means $500 is the risk, right? Whether it is NDX or SPX or RUT or DJX, whatever you do, you always look what is the difference in the spread. That means one you are buying, one you are selling. The difference between those two values, that is your overall risk. But out of that overall risk, you are already collecting some credit. So your net risk is always the points, number of point difference into 100 minus the credit you are collecting. That is your max risk. So when you enter the trade itself, right, when you buy a naked call or naked put, you don't know how much you may gain or how much you may lose. But when you do spreads, you already know what is your risk and what is your reward. Right? It is has a maximum risk and right. It has a defined risk and defined reward. It cannot go so much wrong or it cannot go so much right. And you always have a tax advantage. And also there are some brokerages where you can trade until 4 p.m. Central or even during evening hours for the future days on all these indices. That is the major advantage. So you are because most of the time the sellers make more money in the market compared to the buyers. When you are a buyer of naked call or naked put, immediately it should move in the direction. If it doesn't move, if it goes in the opposite direction, or if it stays choppy, there is a possibility to lose our entire premiums. But when you are a seller, whether you are selling a call or selling a put, and if price stays choppy, you will make money, or price goes in your direction, you will make money, or price goes little bit in the opposite direction also, you will make money. That means you have more high probability to make gains when you are more a seller compared to a buyer. That's why generally we do these credit spreads, right? Credit spreads are right a type of vertical spreads where we generally collect money instead of buying, right, paying money, right? If you are buying a call, you are paying money. If you are buying a put, you are paying money. Whereas here we are mainly a seller. When we are bearish for something, we sell a call. We call it as bear calls. When you are bullish about something, we do something called as bull puts, right? Where we collect. So in both the scenarios, we are collecting the money. So, and if it goes in the direction or if it stays choppy, in both ways we can make nice profits. So out of these credit spreads, there are mainly two types. One is put credit spread, the other is call credit spread. What is put credit spread? That means when you are bullish about something, if you think like gold will go up on Monday or silver will go up on Monday, because they dropped so much on Friday. If you think they will go up, that means you are bullish. You have two options when you are bullish. One is you can buy the calls. But when you buy the calls, the disadvantage is if it stays in a consolidation, in a choppy, in a sideways direction, you will lose all your premiums. That's why instead of buying a call, you can also do something called as you sell puts. But again, if you sell the puts, there is a huge risk. Suddenly, if it goes up so much high or so much down. So that's why you are not just selling a put, you are also taking a insurance or taking a protection, taking a hedge by buying another put. You are selling a higher strike put, you are buying a lower strike put. That is called as a bull put spread. So instead of buying a call, because you have less probability, you have only one chance to make money when you buy a call. Only it should go quickly, it should go up, then only you will make nice profits. But if it stays choppy or if it stays down or if it goes only a little bit up, you will lose money. So that's why we generally our chances of making money is much higher when you sell the puts or do something called as a bull put spread. When you are bullish about some stock or ETF or an index, we do bull puts. Then in the same way, when you are bearish about something, right? Let us say you are bearish about NQ on Monday, or ES or SPY or QQQ. One thing is you can do puts. You can buy the naked puts. But when you buy naked puts, as I mentioned, you have only one way to make money. It should immediately drop. If it waits for a lot of time and drops also, you will lose. Or if it goes up, you will lose. If it stays choppy, you will lose. Only when it happens very quickly, that is where you will make nice profits. Whereas instead of buying a put, if you sell calls, but you are not just selling a call, you are also buying a call. You are selling a lower strike call, buying a higher strike call as a hedge, as a protection, as insurance. And if it stays choppy, or if it drops, or if it goes only a little bit up, then you will make profit. So this is our main strategy for our daily income generation, where we use this bull puts or bear calls every day with SPX or NDX or RUT or DJX or SPY, QQQ or DIA, IWM, or you can use it on XSP, or you can use it on XND, or you can use it on MRUT, or different tickers. So what to do every day? I'll quickly show on TradingView. So you can also, right, I'll show some examples, but if you want to know what happened last month with the same strategy, right, you can yeah, back test with whatever you want. So for these ones, if you have a cash account, you can do it from anywhere across the globe. You can set automatic closing orders, and generally we use 5 minute time frame for these signals. So let me quickly show you using TradingView what we have to do each and every day. So every day around 9 o'clock, right? One major change I did is I added some support and resistance at the top and at the bottom. So in addition to the bands we have, right, this is our band, support band, resistance band. You also have this horizontal line, which is a support, which is a resistance, right? This red line is the resistance. This green line is the support. So for example, let us say we want to take SPX is the number one, right? That is the number one ticker for its highest liquidity. That means when you have liquidity, your bid and ask will be very narrow. You don't need to, if the gap is so much, you are already starting with a big loss when you take a trade. But when the liquidity is high, that means there are a lot of buyers, lot of sellers in the market. Your bid and ask will be narrow. That means you start with a minimal difference, or you start with a small loss when you open a trade. So every day at 9 o'clock, right, 9 a.m. Central or 10 a.m. EST, it gives you a market bias, right? It tells you that based on the pre-market data, based on different factors, it tells you that okay, today, based on whether it is close to the support, whether it is close to the resistance, it gives you an indication that okay, bull puts, right? Today market is bullish. So it is telling you bull puts at bottom of the band. That means it is telling that you only take the bull puts, ignore the bear calls. So if you don't want to take any risk, right? We can also make money with bear calls, but most of the time what happens is we'll make 30-40%, but we miss booking the profits on time, right? Yesterday also it happened. We had a nice gains, but we missed booking the profits on time. Suddenly again it bounced. So that's where I mentioned, right? I made few minor changes so that we will go according to the trend. We will go according to, so the support and resistance lines also will help you to know which direction, right? Market. So for example, right, yesterday when market opened, you are more close to the support. So market is immediately giving that, right? If it is telling at 9 o'clock that okay, you focus on the bull puts, and it is telling that whenever you get a bull put signal at bottom of the band, you can immediately open the bull puts, right? So it is giving you what is the market bias for the day. So you don't take the trades for first half an hour. Wait until 9 a.m. Central. That is where the indicator will tell you, okay, today it is the best time to do bull puts at the bottom of the band. So, for example, here you got a bull put, but it is already right little bit away from the bottom. Then it went up, there was a drop, you got a bull put, right? That means it is telling that, okay, now again it will go up. So now you can go below and you do the, right? For example, yesterday we did 66, 30, 35. So you can immediately do a bull put because we know that market is overall bullish for the day. Then, then most of the time you don't even need to close them. Or whenever it goes all the way to the top of the band, you trim 80%, right? For example, if you take 5 contracts, you close 4 contracts and you keep 1 contract. Again, it came all the way to the bottom. Again, it is right. Again, it is the bottom of the band. It is a bull put. So again, you can go a little bit below. You do the bull puts. Again, it went all the way up. You can trim 80%, keep another 20%. Like that, whenever, so or you are a busy professional. You don't have time to take so many trades. Whenever you receive the signal, you go below, right? Some 10 points down, and you take a bull put. And you don't even need to close the trade. Right? End of the day, price will stay above that price. So every day we wait until 9 a.m. CST. At 9 a.m. CST, based on different factors, it will give you the market bias. That means it will say, okay, do bull puts today or do bear calls today. So if it says bear calls, we have to wait for the top of the band. If it says bull puts, whenever price comes to the bottom of the band, we take bull puts. Again, it came to the bottom, you take bull puts. Here you got a bull put, but it is not at the bottom of the band. So we will not take this one. So that's where I'm mentioning here bull puts at bottom of the band today. Right? For example, if you go one day before, right, you are very close to the resistance. It gave, right, even the market was so much bullish, you are very close to the resistance. It is telling that bear calls at the top of the band today. That means it is telling that even the market gapped up, don't take the, right. Sometimes we see that oh, market gapped up so much, right? It is very bullish. And it may make money, but we miss booking the profits on time. That's what even happened on Thursday, where it went nearly 20, 30 points up or 20 points up, made 40% profit. But we always want to make more gains. So we missed the closing. And then, so that's where this will help you, that it is giving you an indication that today market already gapped up so much. There is a possibility for a reversal. It is giving you a market bias. Bear calls at top of the band. So whenever you see a bear call signal at the top of the band, you just go and do bear calls. Don't do the bull puts. So you got bear calls, there was a huge drop. Again, you got bear calls at the top of the band, again, there was a huge drop. So whenever we see this signal, we'll just go with on the day, we'll only go with the bear calls. So that's like, so that is the main strategy. Every day, 9 a.m. Central, we wait for that signal, whether it is giving bull puts or bear calls. And 9 out of 10 times, if we just follow this strategy, we'll make nice gains, right? You can, right? Most of you already have access to this indicator. You can go back to any date and you can check like, okay, if we are going with that indication, what, right? Because these signals will stay forever, right? Once it prints the signal at 9 a.m., that signal will stay forever. So you can go and see that, okay, I got a bull put. Okay, if I did bull put, did price stayed above this? Yes. If I got a bull put at the bottom of the band, is price stayed above this? If I got a bear call, right? I got a market bias here at 9 o'clock, then price went above and I got a bear call signal. Okay, if I did a bear call, did price stayed below this? I got a bear call. If I do right? Again, it went all the way up. I got a bear call. So like that, you can check for any day. Minimum 9 out of 10 times will make profits. Right? Again, those sudden days where a tweet or something, those days also most of the time we yeah, this strategy will make profits, right? The same thing, right? I can go to NDX, right? 80% of the time SPX and NDX will stay in the same direction, but there are 20% chances where sometimes they can be different. So that's where there is some different logic we have to use. So if we use NDX credit spread, right? Here instead of 5 point spread for NDX, we can also use a bigger spread and you can collect more credits. It also prints what is the support, what is the resistance. So for example, today it went all the way to the bottom, touched the support, and then it gave that, okay, bull puts at the bottom of the band. So whenever you get a bull put at the bottom of the band, you can do NDX credit spreads. Again, you got a bull put signal bottom of the band, you can do the credit spreads. Here you got a bull put, but you are not at the bottom of the band. You are somewhere at the close to the top of the band. We'll ignore the signal. We got bear calls, we'll ignore the signal because the market bias is bullish for the day. If it is a green color, that means market bias is bullish. If it is a, right, for example, here, market bias is completely bearish. That means bear calls only at top of the band today. Whenever price is close to the top of the band, whenever the market bias is bearish, right, because your price is close to the resistance, we'll only take the bear calls. Again, there was a huge drop. We got a bull put. So yeah, one mistake we are doing is we are trying to make money on both the sides. That's where sometimes we are unnecessarily losing the money. So that's where, right, I added or modified some things like this, saying like, okay, bear calls only at top of the band. So whenever price you see a bear call signal close to the top of the band, you will take it. Right here you got bear call, but it is very close to the bottom of the band. You will not take this signal. Right? So that's where this, if you, right, because if you see this one, you will remember every day that, okay, market bias for this day is only bearish. And also, you should not take every bear call signal. Only when you see bear calls at the top of the band, will take. If you get a bear call somewhere at the bottom, or you got a bull put somewhere at the top, you should ignore those signal, right? Even the market is bullish, but your signal is somewhere close to the top here. We should ignore such type of things so that we can make nice profits. So in the same way, right? If you do RUT credit spreads, so again you are close to the support, right? You got bull puts at bottom of the band at 9 o'clock. So you right after that you got a bull put here. So you can, right, because around 9 o'clock you got the signal and then it came down, touches the support. You got bull put signal. You can do it here. You got a bull put. We'll ignore the signal. In the same way yesterday. right? Around 70% of the time or 60% RUT and SPX will be in the same direction. 40% of the time they will be in a different direction. So here you got bear calls only at top of the band today. So here already you got a signal, so we don't take this one. Whenever you see bear calls close to the top of the band on the day, we can do the bear calls for RUT. So one thing is you will also see are we, for example, let us say you got some bull puts. You also one more thing you see is am I close to the resistance? Am I close to the support? Most of 95% of the time it will look at these things and it will tell you based on whether it is close to the support. It will say we are bull puts. If it is close to the resistance, it will say bear calls. But we'll also do one more validation. If it's saying bear calls, we'll see, okay, we understand that, oh, we are close to the strong resistance, big sell block here. So that's why we should only take bear calls today. Or we are already close to the bottom. So we should only take bull puts at the bottom of the band. So what do you think Monday can happen to RUT? Right? Do you think it will be bullish or bearish on Monday? So you can also do, right? We can do swing trades. Sometimes even at the end of the day, you can also do the next day trades. Right? By looking at the chart, do you think RUT can go further up or can go down? You can post in the chat comments. Right? I'm asking overall. Overall, do you think it will go up or go down? Right? Immediately at the open, or there might be some small drop, but there is, right? You are close to a strong support here. That means there is a high possibility for it to go further up. Right? For example, if I go to GC, what do you think will happen to GC, right? Your resistance is somewhere here, right? It went all the way to the top, then it came all the way down. Now you are bull puts. So there is a hype. It might do a small pullback, go further up. Do a small pullback, go further up. So there is a high possibility for gold to go up on Sunday evening or on Monday. There is a high possibility. So we can do bull puts for gold, right? In the same way, silver went all the way here. You got a bear calls. It came all the way down. So now you are close to the support. If you are close to the support, if you are getting bull puts, that is a good opportunity. If you are close to resistance, right, you have resistance here, right? This is your strong resistance. If you have resistance, if you are getting bear calls, that is a good opportunity. So one is every day 9 o'clock we get the signal. Based on that, we take the trades. The second thing is we will also look, right, are we at a strong support or at a strong resistance? If you are at a strong resistance, the chances are very high for price to drop all the way. So you can also do swing trades, right? If you are somewhere close to the resistance, right? For example, SPX, right? This is your strong support area. So if you want to do some swing trades, right? If it goes to 6709 on Monday, we may see a huge drop again. So if it price goes all the way here, that means there is a high possibility for a reversal. Then we can do swing trades for ish, right? We can do bear calls for next day or next 2 days or something. Then you can collect much more bigger credits. So I hope it is clear for everyone. Every day at 9 o'clock, we get a signal which will give you the market bias, and it is telling that only bull puts only at bottom of the band. Then we'll only wait for those bull puts. Only we'll take those bull put signals. Right. For example, Monday, most probably SPX will go further up. Monday and Tuesday, we may see another 40-50 point up. Monday, if it goes another 40-50 points up, then Tuesday, we'll see again a drop. So as of now, 6709 is our strong resistance. So you will see that we may see a nice gap up on Monday morning, or if it stays choppy, then again we can take bull puts because It always you have huge liquidity, sell side liquidity here. You have a lot of buyers here. So price will always try to go grab this liquidity, again drop, and again take the buy side liquidity. So like that, not only for day trading, it will also help us at the end of the day to decide whether we should go for next day trades also. This indicator will help us because you have this strong support, strong resistance lines. So like that, you can use for SPX, you can use it for NDX, you can use it for RUT. So if you see RUT, right, your strong resistance is somewhere around 2530. That means there is very huge possibility for much bigger move on the RUT. That means you can do IWM calls, you can do RUT, right? In the same way, when market is telling that it is market will be bullish, whenever you see bull puts, you can make money with SPX or SPY or XSP. You can also take ES long, right? Or you can take MES long because you know that market is bullish and you got a nice drop to the bottom. When it is telling market is very bearish today, all right, or market bias is bearish, then whenever you see bear calls, you can do SPX, you can do XSP, you can do SPY. Then you can also you can just short ES, you can short NQ. Then there will be a huge drop. So at the same time, you can make money with prop firms. You can also make money with your options. You can buy stocks, right? For example, you see that market will be bullish. You are close to the support, right? Price came all the way bottom, touched the support, started going up. So now you can also buy TQQ stock, right? If you are a stocks buyer, you buy TQQ stock. If you are an options buyer, you can do SPY bull puts, you can do SPX bull puts, you can do XSP bull puts, you can do all those things, right? Or if you are a futures trader, you do ES. Whenever it comes to the bottom, you buy, you go long. Again, it went to the top, you do yes long, right? Just we have to avoid, even though it is tempting, better we avoid this scalping, right? Because the major risk is we miss booking profits on time. Suddenly it will go up. We think like, oh, okay, it may do a double top, it may come down. That's where we are unnecessarily missing booking the profits and losing some of our trades. But if we can stay with our market bias for the day, and if we can take the trades based on the bias. So you have a strict instruction that, okay, only bull puts at the bottom of the band. That means only if you get a bull put signal close to the bottom, then only you go long. Don't take any short trades on the day, right? So like that we can do, right? Generally for DJX, you don't have data, so you have to use DIA symbol. If you use DIA symbol, right? Again, bull puts at the bottom, right? It is close to the bottom support. You got a signal. So whenever it goes to the bottom, you got a bull put, you go long. You take DIA bull puts. You can buy DIA calls. Or right again, if you buy calls, suddenly if it goes up, you make more money. If you want to take low risk, you just do the bull puts. Again, it came down, you got bull puts. Again, it went up. So if it goes all the way to 464 on Monday, then there is a high possibility Tuesday will see a big drop. So Monday will be bullish for DIA, Monday will be bullish for SPX, for NDX, for RUT. It will be very bullish because we know that you are very far away from the resistance, right? If you see RUT, right, your support is here, your resistance is somewhere at 25, 28. That means until this point of time, there is a high possibility it will continue to go up. We will see nice bullish move on RUT on these days. So if you want to just to focus on credit spreads, right, which are low risk strategy, right, with iron fly, iron condors also we can make money. But only thing is, if the move is much bigger than anticipated, that is where we have a risk. If it is a normal day with a 50 point, 60 point move on SPX, then iron flies, iron condors will make nice money. But with credit spreads, all you are doing is if the market bias is bullish, we are just waiting for we are waiting for the buy signals at the bottom. So for example, you want to do iron condors instead of right. For example, you want to do iron condors instead of credit spreads. You want to take advantage with iron condors. Then what you do, right? For example, it is telling that, right, this is your support there, and then your resistance is somewhere at the top. So it is giving you that long iron condor only at the bottom of the band today. It is telling that overall market is bullish. So you only go for long iron condors. Then whenever price you see sell iron condor, we won't go take it because overall we are bullish. If it is buy iron condor, then what you can do, you do bull puts, and then you can also do bull calls, right? Because we are market is overall bullish, market we are close to the support. We do bull puts, you are collecting the money, right? You sell some 6610, 6600, you collect credits. And you can also buy the calls. You can buy 6610 call, you sell 6620 call. So one side you are selling the puts and you can buy the calls, or you can go 20, 30 points up. You can sell the calls here, and you can sell the puts. You are doing a bull put, you are doing a right. Just go right at this point of time. You don't know whether it will go 20 points up, 30 points up. You generally go 30 points up from that price. Then you sell the bear calls. You do the bull puts. Then you are making money on both the sides. Whenever it goes all the way top, sell iron condor, you close your iron condor. Again, you got a buy iron condor. You do bull puts, you go 30, 40 points up, you do bear calls. Again, when it goes all the way up, right, because of the theta decay, right, here it is making money because price is going up. Because you went 30, 40 points up and you're doing a bear call, because of theta decay implied volatility, by the time it goes 30 points up, you are also making money on that side. So if you don't want to just to make money on the bull puts here, just to bull puts here, you can also use the iron condor strategy where you are doing bull put here, go 30 points away, do bear call. Do bull puts here, go 30 point away, do bear calls. Like that, whenever you see a buy signal, you do bull puts, you do bear call. You do bull puts, you do bear call. Now your profit is doubled, right? You are not only with the right with the first indicator, right? With this indicator, you are only doing bull puts, right? Because market is bullish, bias is bullish for the day. We are only doing the bull puts for the day. Whenever you see a bull put signal at the bottom, you are making money. Whenever you are taking a trade, you are selling bull put. Whenever it goes up, either you can close 80%, keep 20% for until expiry, or you can close everything whenever it goes to the top of the band. But you are only making money on one side. But if it is market is bullish, then you can do a bull put here, go 30 points away from that price and take a bear call. So whenever price goes all the way up, you will make money on both the sides. Right? Again, you got a bull put, you go 10 points down, do a bull put, go 30 points up, do a bear call. So you can make money on both the sides with the iron condor strategy. Right? With the credit spread strategy, you are only making one side. With the iron condor strategy, you can do. For example, if it says that overall market is bearish, right? Only bear calls, right? With the credit spread, you are only taking advantage with the bear calls. Whereas if it is iron condor strategy, short iron condor only at top of the band. That means sell iron condor. That means you do bear calls, you go 30, 40, 30 points down, do bull puts. You got a sell iron condor, you go 10 points up, do a bear call, go 30 points down, do a bull put. Like that, you can take advantage on both the sides with the iron condor. With the credit spreads, you are only making money on one side. Right? In the same way, you can use the same strategy for SPX iron fly. Right? Based on the market bias, it will tell that okay, only take long iron flies at the bottom of band today. That means price you got right here. It is telling that okay, this is the market bias. Only follow this. Don't take any sell signal. Don't short any iron flies. So whenever price comes to the bottom, you do buy iron fly. That means you buy a call here, buy a put here. You go 30 points up and you sell a call. You go 30 points down, sell a put. Right? That is a long iron fly. Again, you got at the bottom, you got a buy signal, buy iron fly. You buy a call, buy a put, you go down, sell, right? Go down 30 points, sell a put, you go 30 points up, sell a call. So your cost is getting when it goes all the way up, you are making nice profits with the long iron fly. You are not shorting it here. Whereas if price is dropping, that is where we short, right? You sell a call, sell a put at the money, you buy a call 30 points up, buy a put 30 points down, you will make money with the short iron fly. So like that, the same strategy, we can use it for iron condors, you can use it for iron fly, you can use it for bull puts or bear calls, and then you can also use with SPX butterfly. Right? For example, it is telling that overall market is bullish. So only call butterfly at the bottom of the band today. It is telling that whenever you see a call butterfly signal at the bottom, you take those signals. So what do you mean by call butterfly? You will sell two quantity of calls. You go up, you buy a call, you go down, you buy a call. Then whenever it is bullish, you will make nice money, right? Because you are selling the calls at the money, because that is where you will have a lot of premiums. You are selling and you are buying a call, going down, buying a call, going up, buying a call. That is where we will make nice profits. Again, you got a buy signal here, right? So it is telling that, okay, buy call butterfly. Then we can do, you sell the at the money calls, go down 10 points, do a buy a call, go up 10 points, do a buy a call. Then whenever it goes up, you will make nice profits. So this one we'll ignore because it is not at the bottom of the band. In the same way, if it is bearish for the day, right? It is telling that only put butterfly at the top of the band, right? Don't take any long butterflies, only put butterfly, right? Whenever you get sell put butterfly, that means you will sell the two quantity of put, you go up, buy one put, you go down, buy one put. Then again, whenever it drops, you'll make nice profits. So whenever you see that signal, you can do the butterfly strategy. So the say right, it is we are using the based on the market bias, based on the overall support resistance, we can take the trades. So if you want just to low risk, we'll just do the bull puts and bear calls. Bull puts at the bottom. If it is the market bias is bullish, if the market bias is bearish, we just do the bear calls, right? Then whether market drops so much, market goes so much, we don't need to worry, right? With the trade spreads, with the iron condor also, you have low risk because if market is bullish, what you are doing, you are right. You go just 5 points or 10 points down, you do the bull put. You go 30 points up, and you do a bear call. And whenever price goes all the way up, you can take the profits because of the theta decay and implied volatility. By the time it goes all the way up and again, because it will generally, unless there is a major news, it won't keep going 40, 50, 60 points in one way. Go up again, there will be a drop. So you can, whenever it goes up, you can take the profit on the bull put. Whenever it comes down, you can take the profit on the bear call with the iron condor. Or whenever it comes down, you can close your iron condor, make nice profits. Again, you got a buy iron condor. Again, it went some 20, 30 points up. Again, it started dropping. So you can do bull puts, go 5, 10 points down, do bull puts, go 30 points up, do bear calls. Like that. So we use the same strategy with SPX iron condors, SPX credit spreads, SPX iron flies or butterfly based on based on the market bias, based on where the support and resistance are. And then you can use the same thing for NDX. You can use it for RUT. You can use it for DIA or DJX. So, right, if you want to just to trade the indices with low risk, you can do XSP, XND, those ones. So, if you, yeah, whoever has access, you can go to whichever date you want. If you, for example, if you do Alt G, right, let us say I want to go to September, some September date. So it said like short short IC only at the top of the band. That means it is telling overall trend is bearish. Or if I open this, it is telling only bear calls at the top of the band. So whenever it is bear calls, you just go and do a short, right? All the day the price went all the way down. Like this, you can go to any date. You just do Alt G, you select whichever date you want, and then you'll see that 9 out of 10 times we'll make profits if we follow this strategy. Right here it's at bull puts at the bottom of the band. Whenever price, right, if you get here, you don't do a bull put. Whenever it comes to this one, it is at the bottom of the band, you do a you do bull puts. Again, you got a bull put here, you do bull put. So like that, it will, right, here you go a little bit down, you do the bull puts. Here you go a little bit down, you do the bull puts. Price went at the end of the day, it stayed above those that area. Right here it said bear calls at the end of right, bear calls at the top of the band today. You got bear call signal, went all the way down. You ignore the bull puts. Again, bear calls here, it came little bit at the middle. Bear calls, yeah. So if the band is very, very small, we can even ignore. That means that is very choppy here. But like this, yeah, whenever you get a signal, only you focus on that direction for the day. So you don't need to look at any other ticker or anything. Just you can just look whichever date you want to go, 15 days back, 30 days back, or 2 months back. You will see that based on the market bias, which we get at 9 a.m. Central, first 30 minutes, it will look at all the buying volume, selling volume. Based on all those things, it will tell that, okay, today you only focus on the bear calls at the top of the band. Or if market is bullish, so again, it's at bear calls at the top of the band. Right? Bull puts at the bottom of the band. At the end of the day, it will stay above that price. Bull puts at the bottom of the band. Right? Bear calls at the top of the band. Bear calls at the top of the band. Yeah, if you count all the signals, you will see minimum 85 to 90% of the time we will be making gains. So yeah, that's what we were mainly making mistake of taking the other side trades, right? We were trying to scalp, but sometimes we are missing. So bull puts at the bottom of the band. So only when you get a bull put at the bottom, you will take the trades. Bull put. So whoever has access, you can see, and yeah, if you see less than 85%, you can let me know. So bull puts at the bottom of the band. We never got a bull put. Only here we got the bull puts. Bull puts. I think this was on the 10th, yeah, last Friday, where market dropped so much. And that was the one where we had to take a loss. But I hope everyone is clear with the strategy. Where, yeah, resistance and support will change. Yeah, yeah, all these signals are for indices only, right? Because that is where you don't have the risk of cash stock assignment or anything. So we'll use only for indices. So we can use SPX, NDX, RUT, all those things. Yeah, your support resistance lines will update every day. Based on that, we take a right. Especially if you see you got a bull put at the bottom of the band. If you are close to support, that means you have much higher conviction that it can go all the way, start going to the top. So you can use it for prop firm trading. You can use it for options trading. You can use it for stocks trading. For all different ways, you can use these bands. Yeah, support and resistance lines get updated automatically. Yeah, these lines are different from FLM or right. These bands are same in FLM, but you don't have the support and resistance lines in FLM. Here, you also get the market bias for the day. Once you get the market bias, you know what will be the direction for the day. Based on that, you can just focus only on the direction instead of taking the other side signals. Because as I said many times, generally market makers will try to bring it down and then suddenly they will take it all the way up. By looking at the pre-market, we think like sometimes we think oh market may go down further, but suddenly they will change the direction. Right, yesterday market was right, or day before yesterday market was so bullish. There was a huge gap up. They took it first 15-20 minutes. They try to take it further up. Sometimes by looking at the pre-market, the trend is so bullish. We take it and suddenly they bring it all the way down. So that's where this indicator will help us telling that okay now you are very close to the resistance. So only look at the bear calls at the top of the band. Or now you came all the way to the support. Only look at the bull puts at the bottom of the band. In that way, you can stick with the trend of the day or the market bias. You can ignore the opposite trend. Right? Yeah, I'll send the recording, but I hope everyone is clear like how we can use this strategy for SPX, NDX, RUT, and DJX or SPY, QQQ, IWM, ES, and Q, yeah, YM, all those different trades. And also yeah, we can do for XSP, XRD, all those things. So right, again Monday I'll do a live demo so that it will be much clear. Today I wanted to give you a quick overview because I made some changes. I want all the members who has access to the indicators understand what is this support, what is this resistance, and we can also do right not only day trading. At the end of the day, if you see that you are more far away from the resistance, there's a high possibility market will be bullish next day. Right at the end of Monday, you are somewhere close to the resistance. Right, it might get little bit updated, but overall you are still close to the resistance where there are a lot of sellers. Right at the end of Monday, if you are here, then we can do bear calls for the next day. So because you will collect more credit when you are doing for the next day, your credits will be much higher. So you have more advantage, and there can be a big drop on Tuesday. So yeah, indicator, right? As I said, 80% of the time SPX and NDX will move in the same direction. Russell, right? Your Russell will not be exactly same. 50-60% it will be same. 40% it will be different. So yeah, SPX and NDX, 80% of the time they will be in same direction. So if you have SPX, you can also take you can use it for NDX. Most of the days they will be in same direction. But RUT will be very much right. 50-60% it will be different. If price is close to the resistance, generally you don't get a buy bull puts. Right? If price is close to the support, you get a bull puts. If price is close to the resistance, you get bear calls. So it is looking at all higher levels, liquidity, everything, and it gives you whether to right whether you have to be on the bullish side or whether you have to be on the bearish side. So we have to stay in that direction, and you can make nice gains. Yeah, that's it, everyone. Happy Diwali. Have a nice rest of the weekend. I'll do a live demo on Monday, so you'll get more confidence and more clarity. But yeah, I made some minor changes so that we remember that okay, right, what is the market bias, and so that we should not look at if the market is bullish, we should not look at the bear calls. Right? Sometimes even though it might be a strong bear call, but overall market is bullish. Overall, it is close to the support where we are yeah, losing some trades because of taking it in a different direction. So that's where this wording will help you, or the alert will help you, telling that okay, only take bull puts today at the bottom of the band, and also don't take somewhere in the middle. If you get a bull put somewhere where your price is already close to the top of the band, you don't do the bull puts. Only if the price is, if your candle is close to the bottom and you see a signal, that is where you go long. Only when your price is close to the top, only you do the bear calls. If your price is somewhere close to the bottom of the band, generally that means the trend will reverse. If you are getting a bear call somewhere to the bottom of the band, there is a high possibility trend will change in some time. No, it is not possible to have indicator with drop down for indices because everything works with a different logic. They have different factors, different buying volume, selling volume, the performance, all those things will get impacted. So that's why, yeah. But as I said, SPX and NDX, 80-85% of the time they will be in same direction. So you don't need to have two different indicators, especially RUT will be very much different, but SPX and DX will be in same direction. Also DJX, also 75% of the time it will be in the same direction as SPX and NDX. Only a Russell works in a different way, right? 70% of the time SPX, NDX and DJX, right? YM, ES and NQ move in same direction, whereas your RTY Russell will move in a different direction. So, but again, yeah, you can watch the live demo on Monday. You will get more clarity, and I'll share the recording. Bye, everyone. Talk to you Monday, right? Tomorrow is festival, so that's why I wanted to do a session today. Bye, everyone.